Welcome back to the 10-Minute Bitcoin Show. We're going to get you out of here before the next block. This is the show about autism and caffeine and nicotine, I guess. Today we're talking about a famous quote, a quote you've probably heard, said by our man, the myth, the legend himself, J.P. Morgan in 1912, allegedly. Gold is money, everything else is credit. I got this tweet from Gabber Gerbax. Tweeted this a while ago. I was just looking for a good image. Not particularly using this tweet for any particular reason. Oh, you've heard a lot of people say over the years that they've taken this quote and they've basically reapplied it to Bitcoin. They say Bitcoin is money, everything else is credit. But I think that the important conversation here that needs to be had is, what did JP Morgan actually mean when he said gold is money, everything else is credit? Because I think that this is often lost on people with a cursory understanding of economic history and how the banking and financial system has evolved over the years. So for this, we can turn to Grok. I find AI is really great for doing this kind of research. I've done this type of research manually on my own in the past, but Grok is really great when you want to just get a quick synopsis of certain types of information. So what the prompt that I asked Grok here was, please list all of the times that the U.S. historically suspended redemption of specie in the U.S. banking system. Now, if you don't know what it means to suspend redemption of specie, is simply this. If your monetary system is on a gold standard, like the United States was for a considerable period of its history, paper currencies were essentially IOUs, meaning that if you had some gold because you had done something and satisfied market demand and accumulated a surplus of savings, essentially, you would be saving in the hardest money, you'd be saving in gold. And let's say you accumulated a small surplus of gold. Well, you didn't want to keep that gold in your house for obvious reasons. It wouldn't be very safe for you to do so. It's not exactly easy for you to transact with. You would want to offload some of that risk, store it with a trusted custodian, because those gold bars in your closet aren't doing you a whole lot of good. And when you need to transact with them, it's going to be really difficult to do so. So what the majority of people did was that they would keep their gold, their specie, in a bank. And when they would deposit that gold and specie at the bank, they would get issued a paper note. And that paper note was a piece of credit. It was an IOU. It was basically for every one gold bar or whatever, weight equivalent you were storing with that bank, you were issued a receipt that was an IOU that said, I owe you one gold bar for every one note you have, or however much, whatever the denominations were. The denominations are not important. Now, the United States had a history throughout pretty much from the 19th century onward, starting with the War of 1812, because the United States government had a really hard time financing the War of 1812. And as a consequence of that, they had to do a lot of credit expansion, and that credit expansion created a lot of speculative boom in the United States. And when that speculative boom inevitably runs out, you have a situation where you have a contraction of credit. You find out a bunch of the money in the system, the specie, is no longer there because it was spent to finance wartime spending, because not everybody accepts credit. You need real money. You need real money to spend, to buy and acquire stuff. So what the United States would do whenever it would enter these periods of financial uncertainty, whenever there would be these panics, the panics were always caused by periods of credit expansion, driven by fiscal spending at the federal level, more often than not. What they would do is, whenever people would be running on the banks, quote unquote, meaning taking their IOUs to the bank and demanding their specie because they're not sure if that bank's going to stay in business. And if the bank goes out of business, their IOUs, those private notes that they had that said, you are owed one gold bar at this institution or whatever, people would rush during times of financial uncertainty to withdraw their gold from the bank to make sure that their money was still there. There were many times throughout the United States history, particularly during the 19th century, when the United States government did what was called suspend the redemption of specie, meaning that more or less nationwide, during these periods of specie redemption, you were not allowed to go and exchange your IOUs for specie at the financial institution that had issued you that paper IOU currency. So when JP Morgan is saying in 1912 that gold is money and everything else is credit, he's referring to the specie that was on deposit in these banks, and the paper note that you had, which was an IOU, is credit. It's credit because you are owed a bar of gold that is supposed to be in the vault. But what happens when you show up with that piece of paper and the gold isn't there because it's been spent. Then you end up with a situation where you're kind of screwed, right? So it was a normal part of U.S. financial policy making throughout the 19th century to either, whether it be through bank holidays, whether it be through national directive, to suspend this redemption of specie from these issuing financial institutions up until we entered the time period of the Civil War. So right around the time of the Civil War, the United States government suspended gold payment in specie, period. Like they just outright said, all right, no, we're not doing any more of that. You're no longer allowed to redeem your paper IOUs, your credit money, for gold at the financial institutions that issued it. And the United States government issued for the first time a national paper currency, which was called the greenback. And the greenback was an irredeemable fiat currency. Its value was pegged to some value of gold, and to discourage specie hoarding, right? Lincoln suspended your ability to redeem any of your paper IOUs for gold at any banks. And this was done primarily to finance the Civil War on the Union side of things, and the Confederacy did similar stuff. They both sides printed a ton of paper currency basically in order to finance the war. It wasn't until till around the 20th century that the United States government started issuing a federal gold-backed note. But we need to remember that in 1933, when we had the Great Depression, also caused by expansion of money and credit at the federal level, driven by federal deficit spending, driven by federal expansion of credit, we end up with the United States government around this point in time has issued a federal paper currency that's redeemable for gold. But in 1933, they passed Executive Order 6102 that prohibited specie payouts, specifically saying you can no longer take your dollars, your paper dollars, and exchange them for gold because it's no longer legal for you, United States citizens, to own gold. Now, this prohibition on the ownership of gold, on the redemption of credit for gold at U.S. financial institutions remained in place from 1933 all the way up until after the end of Bretton Woods. So throughout the entirety of Bretton Woods, money was purely credit, and you were not allowed by law to redeem your paper currency for gold, for specie. So this history is crucial to understand. It's crucial to understand that suspension of redemption of specie was historically a policy that the United States government used by edict, by fiat, to essentially clamp down on the liquidation of its own malinvestment created by credit expansion at the federal level, and to prevent the financial institutions that were holding all of the debt issued by the United States government, to prevent the financial institutions that were holding U.S. treasuries from going bankrupt and from going insolvent. The government would temporarily, often for periods of time, like we saw throughout the Civil War, it was for the entirety of the Civil War and a little bit after the fact, they suspended the ability to basically keep those financial institutions that were issuing their own versions of credit in the form of paper currency accountable to the amount of money in their vaults and the demand of their constituency to retrieve that money in exchange for their paper IOU. So when JP Morgan said in 1912 that gold is money and everything else is credit, he was referring to this 100-year period of banking policy in the United States where if you didn't have the gold, the only thing you had was a credit. You had a promise that you could get the gold, provided that you didn't go to try to redeem that paper for gold during a time period where the United States government had suspended redemption of specie. So what the United States government did in 1971, which is why I made the WTF happened in 1971 meme in the first place, was they suspended redemption of specie for foreign sovereign nations participating in the Bretton Woods system. So you really shouldn't be surprised that the nation, and every nation has done this, by the way, the suspension of redemption of specie, but nobody should be surprised that the United States government, who created this Bretton Woods system and said, you just hold dollars, we'll hold the gold, suspended redemption of specie at this international playing field. And you could no longer redeem dollars for gold at the US Treasury if you were a foreign sovereign nation. It's really just the same playbook being played over again, and it's why it's so ridiculous to insinuate that there was some massive systemic change in 1971 that was not normative.